Indonesia has temporarily stopped sending its citizens to work in Malaysia, Reuters reports, over a breach in a worker recruitment deal signed between the two countries. This includes thousands recruited for the plantation sector. Indonesia's ambassador to Malaysia, Hermono, told Reuters the freeze was imposed after Malaysia continued using the Made Online system, an online recruitment platform. The system enables the conversion of tourist visas to work visas, a process that has been linked to human trafficking and forced labour allegations. This violated the terms of the agreement inked in April between the two countries that required hiring to be done via the one-channel system portal. According to the report, Human Resources Minister Datuk Sri M. Sarawanan confirmed receiving a letter from Indonesian authorities informing him of the freeze and will discuss the matter with the Home Affairs Ministry, which oversees the Immigration Department. It said Malaysian companies had submitted around 20,000 applications for workers, about half of which were for jobs in the plantation and manufacturing sectors. De facto Law Minister Datuk Sri Wan Junaidi Tuanku Jaafar says the Paris Court of Appeal has allowed Putrajaya's application for a suspension order to temporarily halt the enforcement of an arbitration ruling in favour of the heirs of the Sulu Sultanate in a $14.9 billion legal dispute between both parties. He said the arbitration ruling was not supposed to be enforced in any countries until a final decision is made by the Paris Court in relation to the government's application to cancel such ruling, of which hearing dates have yet to be determined. The dispute stems from an agreement signed 144 years ago over land in Sabah that was said to have been leased by the Sulu Sultanate to a British trading company in 1878. As of the last Sulu Sultan, Sultan Jamalul Kiram II, say they are owed compensation by the Malaysian government, which took over the annual payments of 5,300 ringgit but ceased the payments after the 2013 Lahad Datu incursion. The heirs then took their case to Madrid, Spain, where the proceedings were arbitrated by a Dr. Gonzalo Stampa. He ruled that Malaysia had violated the deal but was subsequently removed as arbitrator by a Madrid court as Malaysia had not been represented in the case. The partial award he rendered was then annulled. Several months later, Stampa transferred the proceedings to Paris, France, where he issued the $14.9 billion final award. The sum includes oil and gas revenue derived over the years in Sabah. As Malaysia does not recognise this decision, the claimants resorted to seizing Petronas's Luxembourg-registered units, dragging the state-owned company into the dispute. Meanwhile, Prime Minister Datuk Sri Ismail Sabri Yaakob has declined to comment on the seizure of Petronas's units. Pressed for a comment by reporters on the sidelines of the launch of the nation's Housing Blueprint 3.0 today, he said Petronas will issue a statement. Standard Chartered Bank Malaysia says it sees Malaysian corporate earnings growing roughly by 6 to 7% in 2023 from a year earlier, supported by the oil palm plantation and banking sectors. Danny Chang, Stanchart Head of Managed Investments and Product Management, pointed out today that palm oil prices are one of the key bottom-line drivers, while the banking or financial sector is a key component of the local stock exchange, of which close to 40% of the earnings come from the financial sector. He said at a press conference in conjunction with Stanchart's Global Market Outlook briefing that these two core sectors alone should therefore drive a fair bit of the earnings coming through. He added that the domestic real estate and construction industries are expected to disappoint next year and could prove to be a drag on some of the profitability of the nation's overall corporate earnings. Stanchart Head of Asset Allocation and Thematic Strategy, Audrey Goh, was also present at the press conference. She said Stanchart has advised clients to trim their exposure in global equities and turn to bond markets amid expectations of slower global economic growth, which would erode global corporate earnings. The bank is projecting an over 40% chance of recession in the US and Europe over the next 12 months. Singapore-listed food solutions and gateway services provider SATS is disposing of its entire 49% stake in Ibrahims Sats Investment Holdings (BSIH) for 10 million ringgit. BSIH holds a 70% interest in in-flight catering services provider Ibrahims Sats Food Services, while the remaining 30% interest is held by Malaysia Airlines. Loss-making Ibrahims Holdings, which was delisted last month, owns the remaining 51% stake in BSIH. According to SATS's filing with Singapore's bourse, a share purchase agreement was inked with Dewina Ibrahims Holdings and Ibrahims Holdings. SATS said it made its decision following a comprehensive review of Ibrahims Sats Food Services' current market position and challenging operating circumstances, and its strategic value and financial significance to the company, which is the main ground handling and in-flight caterer at Singapore's Changi Airport. Ibrahims Holdings was delisted on June 3rd after the stock exchange operator rejected its appeal for more time to submit its regularization plan. Its shares had been suspended since April 22nd and were last traded at 1 cent, valuing it at 3.07 million ringgit. Samsung Engineering has secured a contract worth $680 million, about 3.02 billion ringgit, from Sarawak Shell to build an onshore gas plant for its Rosemary Majoram project in Bintulu, about 620 kilometers north of Kuching, Sarawak. According to Bernama, the job is for engineering, procurement, construction and commissioning (EPCC) of the plant. It will be executed in 2 phases, the first of which will be carried out on a limited scope before Sarawak Shell makes its final investment decision, after which the remaining scope is to be carried out. The plant will be able to process up to 800 million cubic feet of gas per day, with a ready-for-startup date by end 2025. Samsung Engineering said it won the contract after competing and emerging as the successful bidder from the dual front-end engineering and design or FEED stage. Its president and chief executive officer, Sungan Choi, said its track record, regional expertise and sustainable investment in Sarawak, coupled with the strategy to participate from the FEED stage and roll over to execute a total solution in EPCC, had enabled it to bag the job. He said it will participate in additional FEED as well as EPC conversion projects in Malaysia.